Are you ready to buy a home and you're wondering what your next step is? That's what we're going to talk about today, and we're starting right now. Hey y'all, thanks for coming back to my channel. I'm JanetRabbia and I'm a realtor in the Temecula Valley area. If you haven't already done so, make sure you click that little subscribe button below and click on that bell so you get notified every time I post a new video. Today, we're going to talk about the next steps when you're ready to buy your home, and we're going to start now. One of the first steps when you want to buy a home is to get your pre-approval from your lender. That's really important because your lender needs to know that you are fully able to repay your loan. They're going to look at your credit score, and the higher your credit score, the less of a risk you are to them. They're also going to look at your payments on time. Have they been on time? Have you been late on any? If you've been late on some, that does make a big difference in your credit score, and it also makes a difference in whether you can qualify for a loan or if they tell you you have to wait a little while until you can get that pre-approval. During this time, it also gives you time to talk to different lenders so you can figure out which one you have the best relationship with, and you'll know different types of loans because they'll go and they'll guide you and educate you on the different type loans that are out there and the one that's going to be best for you. Once you get that pre-approval from your lender, you're ready to start looking at homes. Next is the typical time that it takes to close on your new home. Usually it's anywhere from 30 to 45 days. During that time, you're going to do your home inspection so you can find out if there's any issues with the home. Also, you can negotiate with the seller and find out if they will do certain repairs that you need done. There's repairs that they will do, and there's repairs that they may not do. Because a seller can agree to all of your repair requests, they can agree to some of your repair requests, or they can agree to none of the repair requests. Typically, they do some of them. I haven't really ever had a seller who said absolutely no, they will not do any repairs. During this time, your lender will also schedule and order a home appraisal. That's really important because the lender wants to make sure that they're not loaning you more money than the house is worth. So they get the appraisal so they know that the loan is going to be solid because the house is worth at least what you're getting the loan for. It's also a time that they review all the title and they do a title search. It gives you time to review all the mortgage documents and the closing documents so that you're ready to sign those loan docs at the end so that you can fund the loan and get the keys to your new home. Next, once you put an offer in, can you back out of the home and back out of buying it? Yes, in certain situations you can. For example, if you do the home inspection and maybe there's a lot more repairs than you're ready for and you're thinking, this is way more than I bargained for. If you're still within your contingency time frame, then you can back out of the contract at that time, and typically you're going to get your earnest money deposit back. If you wait after your contingency time frame, it makes it a little bit more difficult to get that earnest money deposit back. Now, do you have to pay the price that the seller is asking for their home? No, prices are always negotiable. In a seller's market, it may be a little more difficult, and if you put in a low-priced offer, chances are the seller's not going to accept your offer. If it's a buyer's market, then you have a little bit more negotiating power and a little bit more able to offer a lower amount on the home. When is the best time to buy a home? It all depends, really. It depends on what part of the country you're in. It depends on if you're a move-up buyer or if you're a first-time home buyer. Sometimes April seems to be a really good month for people. People are putting their houses on the market then. Sometimes it happens right after spring break. A lot of people have come back from vacation with their kids and they start deciding that, okay, now they want to move in the summer, so it's time to put their house on the market so they can get it sold by the time school is out. Also, the end of summer is a great time to buy a home because the same thing. Sellers are thinking, okay, I want to get my home sold so that I can move before school starts. So that makes sellers a little bit more motivated as well. I also find that during the holidays, it's a great time to go looking for a home. There are homes on the market, very negotiable, and it is a busy season, although a lot of people do not believe it is. If you own a home now, do you need to sell it before you buy your new one? Talk to your lender, see if you can qualify for both mortgage payments. If you can, then you can look for your new home, find the one you want, go ahead and buy it, and then sell the home that you're in right now because you can qualify for both of the mortgages. If you can't, If you need to sell your home in order to get your new loan on another home, it's okay. You can go ahead and sell that home, but keep in the back of your mind, if you don't find another home right away, then you may have to go into another type of housing. Maybe you're going to have to live with family or friends for a month or so until you find your new home and can close on your new home. It does give you a little bit of negotiating power too when you're buying, because you've got that cash in hand that you had on your equity from the home you just sold. So it does give you a little bit more power when a seller is looking at your purchase agreement and they're looking at the price you're offering and also how much you're going to be putting down on your loan. As a buyer, do you have to pay for the agent? Typically, no. Typically, the seller speaks with the seller's agent when they're doing their listing agreement, and they decide on the terms for the commission. Then the commissions are split between the listing broker and the buyer's broker. Then that's how they get paid. So the buyers typically do not have to pay any of the buyer's agent's commission. Closing cost. This is a big one because a lot of people don't realize that in addition to your down payment, you also have closing costs. Usually closing costs are about between 2 to 3% of the purchase price. The closing cost, consider your loan origination fees, if there's a fee for your mortgage application, sometimes your appraisal is included in that amount, if you have to pay any points for your mortgage, if you are doing a wire transfer fee, that gets added into your closing costs. Your credit report is sometimes in there. If you have to have a survey done on the home, that can be in there as well. You also may have prepaid mortgage interest in there, your homeowner's insurance, and property taxes. Sometimes you're able to negotiate with the seller and ask for the seller to pay part of your closing cost. It's always a good thing to talk to your lender, because your lender is going to tell you exactly how much you're allowed to ask for. Depending on the loan type that you're doing, there's a certain amount that you're allowed to ask the seller to pay. So it's really important that you talk to your lender so you make sure you know that amount, so that when you're ready to put your offer in, you know the amount you can ask for. Your earnest money is the money you're going to put in when you put your offer in. Typically, it's about 1 to 3% of the purchase price. Now, once your offer is accepted, that earnest money goes to escrow and they hold it in their account. Now, at close of escrow, whatever that amount is, say it's $10,000, that goes towards your down payment. So maybe you were going to put $50,000 down. You have that $10,000 in there that you had in your earnest money, that goes towards that $50,000 you were going to put down. So then you only have an additional $40,000 that you need to come in with for closing. Plus, remember the closing costs that we just talked about that are between 2 and 3%. Also, you may be able to get help with a down payment assistance program. Check with your lender and you may qualify for one. Also, if you qualify for a VA loan, then you may be able to come in with absolutely zero down. You need to check with your lender again and make sure that you are approved for those different type of loans. What's the ideal amount to put down as your deposit for your new home? It's going to depend on your loan. If you can put 20% down, and then typically you're not going to have to pay your private mortgage insurance. If you can't put the 20% down, that's okay. There's other loan programs where you do not have to put 20% down. There's FHA, there's conventional, and there's different types. Some are 3%, some are 3.5%, and some are 5% down. So again, you're going to want to talk to your lender to figure out which is the best loan for you and which is going to make the most sense for you. Thanks so much for watching my video. And if you click on the link below, you can get my guide to the 7 mistakes that first-time home buyers make. If you get it, then you won't make those same mistakes. See you at my next video.